Hi traders, this is Sin with the New Level Trading Report for Monday, May 23rd. Stocks plummeted as investors' concerns over the financial health of European governments triggered a flight to safer assets. The Dow continued to downtrend with a 130-point loss today, as well as the Nasdaq down 34 points and the S&P lost almost 16 points today. This is a chart of the 2-minute S&P futures, and as you can see here, I wanted to take a look at the open, and just lots and lots of chop for several hours. We made this bottom here at 1310, came back into that chop area, tried to make a bounce, and then sold off and pretty much right where we started, down for the day. As you look at the daily chart, obviously you can see we had a spinning top on this is a weekly chart, and we're back actually breaking this 20 period moving average. And so at this point it still looks like it could be a pullback, but we'll just have to wait and watch that. But as far as the daily chart goes, we definitely have lost that 50 period moving average, and so there's a possibility that we could at least come into this 1290 range. So we'll continue to watch that. Taking a look at the Nasdaq, not much difference. As you can see, just we broke down overnight, and lots of chop throughout the morning. Had that bounce as the S&P did, and then sold back off. So again, not much going on with that 34-point loss. But as you can see, again, below the 50 period moving average, and obviously we have a little bit of congestion in the 2287-ish range. So we'll wait to see what happens. Obviously, we have a lot of economic news coming in daily about the European countries, so that will definitely play into what's going on with the stock market. And let's take a quick look at the dollar index, the DX, which you can see we bounced. And I think I mentioned on Friday this could just be a pullback and into this 50 period moving average, and indeed we have gone up into this retracement period. So we'll wait to see what happens on that. Don actually had a difficult day today. He did have bear call spreads on Priceline and Google, and as you can see, we did have, we just had such a gap down and actually continued that gap. We got a little bit of that, and then we started bouncing and continued throughout the day to bounce. So just not really necessarily a good day. He did trade some of the futures, had some gains, but basically was down for the day. So that was always just disappointing. But I wanted to show you Brian actually during the market lunch hour. He showed traders a new study that he's created for New Level Trader members, and that it's actually a derivative of the average true range oscillator, and he discussed how and when it's used, and it was actually a very informative presentation. So I just want to show you just a brief part of that.
That I got out, and I was starting to get out when I started to see the price, the bodies of these candles having a trouble at 16 spot 20, seeing a lot of tails at the top. I see this starting to turn, and so I exited the trade up in this space up here. So not a huge trade, and it was definitely a bracketed trade where the first one sold off somewhere in here, so I had room for the trade to breathe. And so that's an example of how I look at this crossover as an indicator that something valuable is going to happen. And all I want to do is then use my basic technical analysis, candle reading, volume reading, to say, okay, where can I be right? Where do I want to get in? Where do I want to get out? And what happens if we break these levels? The basics of technical analysis. So it's not an end-all, be-all, but you'll notice that it can be very helpful. For example, there was a cross that happened right here, a trade that I would not have taken long because the average true range of price, we were double topping. This cross action is happening at the top. So might that price have run away from me and I missed the trade? Absolutely, and that happens a lot. So, but it does help me not only with measuring the general direction of if this is crossed to the downside. A little similar in logic to if you were watching an 8 into 21 period EMA kind of crossing, although those, for me personally, those are a good bit too slow. So that's something that helps me a lot. And it also
Thanks, Brian. That was really a great, informative discussion today. Let's take a quick look at the S&P. Actually, I wanted to have you look at this, the map, obviously, of the S&P today, and talk about a lot of red. As I said, just not a good day for trading to the upside. And again, lots of chop throughout the day, so it was difficult to trade either way. But let's take a look at our bubble study. And as you can see, the big winner today was CF Industries. Just had an amazing day, an over 6% gain. And actually, Staples had a nice day. They were over 2% up. Orly, which was up, or Riley, I'm sorry, was up about almost 2%. And Monsanto actually had a really nice day too, up a little over 1%. And again, that was on a gap down, and they recovered and actually ended up with doing really well for the day. I mean, so many losers today, but where should we start? I see one of the big ones, obviously, Oracle, a 3.5% decline. Textron was down almost 4%. IP, which is International Paper, down almost 4% as well. I'm just going to stretch this out. The AES Corporation down almost 4%. So lots of things. Dell was down. Joy Global, St. Joseph's, St. Jude Medical was down. Agilent, which was up the other day, actually, not a good day. So again, just not a really great day for trading in general, but we had a really nice day. Thanks again for joining us today. Have a great day. If you have any questions about trading or membership, please call Brian at the number on our website. Have a great evening, and we'll see you tomorrow.